What is asset allocation? What is this investment strategy all about? Let us get the basics right. We have investment expert Sadish Prabhu with us. Sadish, could you please explain in a nutshell what is asset allocation?
First reason is that it provides a stability to your overall portfolio. Now, let me give you an example. Suppose you had invested all your money in equity and equity market fell by 40%. Now, your portfolio, if it is worth a lakh of rupees, will come down to about 50,000 rupees if the fall is by 50%. So I'll make it easy, I'll make it 50%. If the fall is by 50%, your portfolio will come down to 50,000 rupees. Now, suppose you had invested half your money in debt and half your money in equity. So 50,000 rupees in debt and 50,000 rupees in equity. Equity markets fall by 50%. If that was the case, your 50,000 becomes 25,000 and your debt remains at 50,000 rupees. So from 1 lakh, you have lost 25,000 in equities and your overall portfolio now is 75,000 rupees. In the earlier case, when you had invested all your money in equity, your portfolio was worth 50,000 rupees. So asset allocation, because you split your money between equity and debt, it helped you lessen the fall from 50,000 rupees to just 25,000 rupees. So you had a 25% fall in your portfolio by investing in debt versus a 50% fall in your portfolio if you would have invested everything in equity. That is what I mean by providing stability to your overall portfolio. Now, it also optimizes risk-adjusted returns. It again tries to balance or tries to reduce the fluctuations in your returns because it invests in equity and debt put together, and the fluctuation in debt is less. It reduces the volatility of the returns and tries to give you better risk-adjusted returns or tries to give you better returns for a certain amount of risk. It doesn't take very high risk. It takes some medium level risk and then tries to adjust the return. Obviously, the flip side is that you will not get the highest returns because you have invested in other asset classes to reduce your risk. You will not get the highest return, but you will get returns which are more optimized, more balanced for the risk that you have taken. So here we are trying to balance between risk and return. Remember, this will be a theme throughout the presentation, risk and returns. It provides a more disciplined approach and negates timing the markets. Now, why am I saying this? When people look at equity markets, there are two emotions that go with equity markets. One is greed and the other is fear. We put all our money, or we want to invest more money in markets when they rise, and when we want to invest less money in the markets when they fall. And because of which we lose the discipline of investing. And Mr. Ramalingam here will agree that he may be facing a very tough time to explain to investors to stay invested when the markets are in a bad condition. So asset allocation, because it reduces the fluctuation in the returns, it helps you cool your mind, stay level, that between greed and fear, you stay invested in the markets throughout. You maintain your discipline. What do I mean by discipline is, if you have a SIP, you continue investing in that SIP. You don't move back or you don't stop your SIP because the markets are not doing well. When you are allocated between debt and equity, you'll realize that the portfolio risk, the risk of returns in your portfolio falling very low are lesser. And that's the reason it helps you give lesser fear, because in out of fear you tend to exit or you tend to reduce your investments. So it helps you to stay level headed between greed and fear and helps you stay disciplined while investing in the markets. And last but not the least, it addresses your liquidity needs, as well as if there is any tax planning to be done, it helps you do that.
Thanks for your detailed answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.